Welcome back to the Dividend Diplomat YouTube channel, guys. You got Bert and Lanny, your favorite dividend investors out here in all of social media, guys. And we're here to talk about two stocks. One is a dub, and one just kind of continues to appreciate in value. Both in my portfolio, both in Bert's portfolio. And the question is, what's our take on these stocks? What's your take on these two stocks? Do these belong in any portfolio? Very curious what you guys are going to say about it. Very curious what Bert and I will also say about these two stocks.
While you're listening to us, make sure to smash that subscribe button. Give your boys a thumbs up. Help us get to 20,000 subscribers. We can't wait to keep pumping out content, keep bringing you dividend news and dividend stocks. So also let us know in that comment section, are there any dividend stocks you want us to analyze? Keep coming and keep letting us know.
Exactly, guys. Let's get to 20,000 subs. But, as I was going through my portfolio, obviously it's also the year of cleanup. And this first stock is actually one of those stocks that I've been looking to clean up for quite some time, probably, a year to 2 years. Definitely a lot more this year, but always has been on the list. And I think you know that as well, Bert.
Yes, you do not like this stock, and I think it's absolutely hilarious. It's been a noisy
Tell me
stock.
why you like it.
I didn't say I like it. I didn't say I love it. I'm just saying it's in my portfolio and it's noisy because it's been a part of the what is it, the snip snap mergers over the last few years. The merge, demerge, merge again, demerge, split.
Exactly,
It's been
guys.
quite the journey for this company.
Apologize. I'm battling a stuffy nose here. But Dow Chemical, ticker symbol freaking Dow, DOW, not to get confused with the Dow Industrial Jones, not to consider with the Dow index here, guys. Um, but this stock just continues to not do it for me. The dividend yield is great. That we'll get into in the metrics, but from a revenue performance, net income performance, debt just doesn't do it for me. Um, Dow revenue in 2019 was 43 billion. Dow revenue in 2023 was 44.6 billion. So no movement.
No growth.
Um,
What at least on the bottom line though, Landy? That's the question there.
yeah,
2019.
they went from negative margin to positive margin. They went from negative 1.4 billion net income, net loss in 19, probably from the mergers and all the stuff that was going on there, to 589 million on 44.6 billion in revenue. So that's only a 1.3% margin on their business right now. Shares outstanding have come down quite a bit. Again, when shares go down, EPS can go up. But obviously, that is them trying to find a way to return capital to us shareholders, right, guys? That whole returning back to shareholders, which I don't think it's really done it in the stock price either, but we'll get to that later. Long-term debt has stayed still pretty high. They were at 15 billion back in 19, probably due to the mergers and acquisitions and the snip snapping that was happening. Blew up to over 16 billion in 2020. And then kind of has been in this $14 billion range, into 2023.
Yeah, so it's not been great, right? That's really, I think, what the story is for Dow. It doesn't seem like they're utilizing their cash well. They can't figure out what company they want to be. They can't figure it out. And yes, we're referring to the Dow merger, the Dow DuPont merger, the Dow DuPont split off, and then
Ortiva.
yeah, and that was before that. And then DuPont splits itself off. So it's this jumbled mess for a company that really should be doing a lot better. The question is, how do their metrics look? Despite all the noise, how are their metrics looking? To do that, we're going to run them through our screener, which focuses on PE ratio, payout ratio, history of increasing dividends, and that dividend yield.
Oh man, guys. Well, we're gonna dig into it. We're filming this on the night of August 1st, Thursday night, guys. They're trading at $53.28 per Dow stock, which by the way, do you own Dow stock? Let us know in the comments below if you're a Dow Chemical shareholder. Stock is down almost 4% this year, down about 4.5% from last year. They are up 17% over the last 5 years, but that has tremendously lagged the overall stock market. But again, we'll get into that. P ratio right now at 259. Earnings expectations, they're at a clean 20.57.
All right, Lanny. So you said earnings per share were 259, right? We're going to move into that such second metric here when we talk about the dividend. Their annual dividend is $2.80. Humor me on this. Is $2.80 higher than $2.59?
Hmm. Is 259 higher than 280? No.
So it looks like we got a little bit of a problem on our hands here, Lanny. Got ourselves a little sticky situation because that
Yes,
payout
we did.
ratio is 108%.
Again, we've been talking about it here on the channel for quite some time, and that needle just doesn't move. It's actually getting slightly worse, I think, each time I look at it. This is giving me flashbacks to when First Energy cut their dividend. Um, the unsafe dividend right now. I don't want to scare you guys, but the payout ratio at over 100% can only last so long. No dividend growth, by the way, guys. So I'm not even going to get into that. Bert, what about that dividend yield?
5.26%. So at least they're paying you to wait for now. For now, because yeah, again, that 108% payout ratio is not sustainable in the long
No. Year to date, again, the stock's down. 5-year dividend yield's 5.34%. So the yield currently is actually slightly below that 5-year dividend yield average. Um, again, kind of a dog. The dog of the Dow. The Dow is the dog here.
run. All right, so that's Dow, everybody. Let's move into our
That's
second
the
stock.
dud. That is the dud.
Yeah, way to start us off on a positive note, Lanny. So we're
What are
going
you
to
guys
talk.
doing with Dow? Let us know, by the way.
Yeah, this stock though at least has grown 83% over the last 5 years. So appreciation has not been the issue with this stock. Can't wait to talk about this company here,
Yeah,
Chico.
I mean, we're talking 5 times what Dow has done. But the question is, how does the dividend perform? And I think we're going to really get into that one. We're talking a dividend king. This used to be one of Bert's 5 always buy stocks. This dates us back to almost 10 years ago.
Yeah,
Uh,
I need to dust that list off and laugh at it because I can only imagine what that would entail. But you know what? It hasn't been bad. Appreciation wise, 83% growth. Can't really complain too much about that, right?
cream rises.
Cream rises. Cream rises,
We're
lady.
talking about Emerson Electric, guys. Ticker symbol EMR. Emerson Electric. Yes, the dividend king, guys, which means they have over 50 years of dividend growth. This stock cracks me up, and you'll see why. Yeah, they are up 18% this year. Yeah, they're up 23% from last year. As Bert said, 83% from 5 years ago. Bert, what's the stock price at right now?
Not one, not two, but $113.09 per share, which has been interesting. So it's been a strong appreciation and a strong run. And then when you slide over to the financials and you see, okay, so it's grown 83% over the last 5 years. How have the financials grown over the last 5 years? And what's interesting, the top line doesn't match what's happened with the rest of the company here, Landy. What is that revenue growth that we've seen for Emerson?
Without seeing if there was any divestitures, I think that as Bert and I
There's
were talking, there was maybe one or two or a few, especially one with big discontinued operations to cap off 2023. But revenues declined for the company since 2019 from 18 billion to about 15.
Yeah, so with that though, they still managed to grow their earnings. And again, to your point, they had a huge gain from discontinued operations. So in 2019 it was 2.3 billion. 2022 it was 3.2 billion. And the reason I bring that up here is because 2023 was 13.2 billion because of that one-time gain. So even if they just repeated 2022 and kept it in the low threes, that's still a pretty substantial growth in net income for Emerson.
Real solid margin. The margin just kept increasing over those years of
Mhm.
2020, 2021, 2022. Shares outstanding kept decreasing. They've actually dropped from 620 million shares outstanding to 577. A 7% drop in shares outstanding over 5 years. Pretty steep. Long-term debt has grown, but not like at an alarming rate, going from 4.3 billion to 7.6 billion over that 5-year time period.
Yeah.
But we're going to dig into the double D stock metrics here, guys. Do you guys, by the way, own Emerson? Let us know. Bert owns it. I own it. $113.09 stock price. EPS $5.47. So similar to Dow, this also has a PE ratio of about 20.7 times earnings.
Yeah, the good news is I can solve this equation myself, Landy. Their earnings per share were 547. Their dividend is $2.10. So I could tell you they have a safe payout ratio because 210 is less than 547. That payout ratio is 38.39%.
Yeah, very safe. Dividend growth, got 67 years of growing dividends. Not
Woo!
one, not 10, not 20, not 40, not 50, not 60, but 67 years of growing dividends. But Bert, they only grow it at an average rate of about 1.39%. That is like
Not hearing it. Not hearing it.
not doing it.
It
But wait,
it's
if their dividend grows so low, that means their dividend yield must be so high, right?
But wait, there's more. No, it's not. It's 1.86%, which is well below its 5-year dividend yield of 2.31%. So what, 45 basis points less than the margin.
Low yield, low dividend growth. What gives here? Like what gives here? And that's the
Yes.
biggest beef I have with Emerson.
But at least they have the appreciation record to go along with it. That's why you look at that 5-year growth and you're like, hey, if you're not going to get the dividend yield, you're not going to get the dividend growth you want. At least they're up 83% over the last 5 years.
And I'm assuming our stock positions are up even way more than that because of the over decade that we've owned this
Yeah.
stock. Um,
Yeah. So it's a
you
great,
know,
it's a great
yeah,
company. The dividend growth just isn't there. It's a weird company from in that regard.
it's a very weird company. It's one that grows in share price, buying back shares, improving net income, profit margin, operating the business well, trying to find ways to reward shareholders. And it seems like their primary way to do that is to increase that stock price. And maybe they just have a dividend to grow the dividend to be in some sort of fund or
Yeah.
ETF and
Keep
just
the
to get the
king status.
institutional. Yeah, yeah.
Yeah, it's a great point there. So, I mean, the price, it's not a discount right now. It's clearly not cheap, but it's quality. And that's, I think, what matters. And you compare that to Dow that has the same PE ratio and
Now you can
dog
always
you.
argue S&P 500's up 86% in the last 5 years.
It's like
And
hold my beer.
yeah, and so owning the S&P 500 can get you at or a better yield plus, between a 6 to 9% dividend growth rate too on
Yeah.
VOO.
So everyone, let us know here. What do you think of Dow? What do you think of Emerson Electric? And if you were us, would you sell either of these shares? We'd love your thoughts.
Yeah, guys, let us know. Seriously, we would love to hear the feedback on these two stocks. The name of the game, though, again, is just trying to get information out there to help all of us make decisions to grow our portfolios, grow that passive income, and get the financial freedom, baby.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, what do we need to tell the people out there?
Well, let me tell you something, brothers. You're either with us or you're against us, Jack. That was Bert, the hurt man, and Lanny from the Dividend Diplomats. Over and out.